Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Wednesday, the 4th of January, 2023. I'm Daniel Lam, your host for the podcast. I met up with a university friend while I was in Malaysia at the year end. And we talked about a mutual friend of ours, whom we suspected had plastic surgery that transformed him from an average-looking person to looking like Daniel Day-Lewis. That comment, of course, reminded me immediately of the movie The Last of the Mohicans, which, in my view, is one of the movies where it was better than the book. Now, in the world of central banks, the Bank of Japan was the last of the Mohicans. For most of 2022, it was the only major central bank that maintained an easy monetary policy. But that too changed in that eventful month of December 2022. The announcement of the widening of the yield curve control band 2 weeks ago allowed the Japanese government bond yields to potentially trade at a higher yield. In layman's terms, this was effectively a move to tighten monetary policy. Now, this pair of dollar-yen has been getting quite a bit of airtime within our CIO team as well. We gave a 12-month target of 127 in our 2023 annual outlook, and now we are very close to that level. So what should one do about this currency pair? Let's check this from a few drivers. First of all, this latest move by the BOJ reduces the interest rate differentials between the US and Japan, which has contributed to 2022's Japanese yen weakness. We believe there's still tailwind on this front, and the next BOJ meeting on the 18th of January will be heavily followed. Secondly, the technical chart shows that the dollar-yen is still on a medium-term downtrend. The pair already started to fall at the beginning of November due to favorable news coming out from China, which reduces the safe haven demand for the US dollar. Dollar-yen has been making lower highs and lower lows, and the fall accelerated as the BOJ announcement came out. Now, let us dig deeper into more technical indicators. Remember our framework about comparing the relative strength index, which is the RSI, versus the level of the asset. You can see that the RSI hit 30 on the big down move on the day of the BOJ announcement, and then hit 30 again over the last few sessions. We are seeing lower levels on the dollar-yen, but the strength of selling indicated by the RSI has not been getting stronger. Thus, you may expect to see small rebound in the pair before it resumes its medium-term downtrend. A fair level of estimate would be 133.40, which is the 61% Fibonacci level from the range of 131 to 135, which was where the pair spent most of this time after the BOJ announcement. Investors may consider putting on a short dollar-yen position if it hits 133.40, targeting our 127 level. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.